In March 2024, Bitcoin crashed 23%. In July 2024, it had crashed 16%. And in January of this year, the Bitcoin had dumped 31%. But these all crashes were not random. This all happened exactly when this man Yude, governor of Bank of Japan, made one specific move. And we are less than 48 hours away from December 18th, when the Bank of Japan governor is again going to make a decision that have full potential to surpass the growth of Bitcoin or any other stock market for years or maybe decades. But everyone is watching Fed, BlackRock or interest rate news in the USA. But the real problem is in Japan, and it's not interest rates. It's the $500 billion of liquidity bomb that almost no YouTuber is covering, but I will. But before moving further, disclaimer, this video is not a financial advice and I am not a financial advisor, so please do your own research. To understand what is happening with Bitcoin in December 2025, you must understand what happened in March 1999 in Japan. In 1999, Bank of Japan reduced interest rate to zero to fight with deflation, which is just opposite of inflation. And after this decision, it was like free money flowing everywhere, and you can take as much as money you want, and you don't need to pay any interest on that amount, and you can return the same amount back whenever you want. Therefore, big investment companies of Japan started taking loans from banks and started investing in foreign companies stock, and now they are investing in Bitcoin too for higher returns. And this also attracted foreign investors to take loan from Bank of Japan to make free higher returns, and this whole process is called carry trade. And this whole carry trade process was working very smoothly for last 30 years because Japan maintained interest rate to nearly zero, but now Japan want to increase the interest rate because Japan yen currency got weaker and inflation had increased in Japan. So to make yen stronger and reduce inflation in Japan, they wanted to increase interest rate. And if they succeed in increasing interest rate, then it will break the free money machine system. To make it more clear, just understand like some bank had given you credit card with 0% interest rate, and you have used that card for decades and spent tons of money without any fear of paying it back because it had 0% interest rates. But now company told they will increase interest rates on that card, and soon after this rate hike news, first thing you might do is you will pay back your all loans to get saved from paying interest rate on that amount. And same thing all investor might do, they might take back all their money back from their investment in whether it is in Bitcoin, bonds or any other country to pay back their loan to Japan if Japan increases interest rate on 18th of December. But why this is the biggest threat for a Bitcoin? To understand this, you need to know how much money Japan had invested in America, because America is considered as a crypto capital of the world and Bitcoin react mostly on how America is doing. During 2008 global crisis, when American stock market was screaming, the Japanese currency yen increased up to 30% against US dollar, and this happened due to carry trade unbound. The investment in US from Japan started returning back to Japanese yen, and that inflow in yen made it stronger against US dollar in 2008. And there was estimate that about 500 billion to 1 trillion dollar was returned during this 2008 global crisis. But for 2025, I can tell you exact data about how much exact money had gone out from Japanese market to foreign countries or foreign stock market or crypto market, because there is lack of transparency from Japan government about inflow of the yen or swap of the yen to another global currencies. But we can assume while looking at $500 billion to $1 trillion of inflow in Japan during 2008 global crisis, that what kind of inflow we can see in Japan from global market if Japan increases or keep increasing interest rate. However, Arthur Hayes, co-founder of BitMEX exchange, argued this is ultimate buy signal for Bitcoin if Japan increases interest rate. I will explain this further in video why he says this statement for Bitcoin. To understand this threat of $500 billion, you need to understand bond yield curve. And believe me, this will separate you from crowd of dumb investor and will put you in top 1% who really knows where the Bitcoin or any market is in this crash. and when it will bounce back. In 2016, there was very serious problem of deflation, which is just opposite of inflation, and due to which interest rate was going into negative. Means if you're holding money in banks, then you need to pay interest to bank to keep your money. But during positive interest rate, bank pay us interest, not we pay interest. Otherwise, why anybody would keep their money in Japanese bank if bank are charging them to keep their money in bank? And this all things might happen only due to negative interest rate, and if it continued for longer period of time, then there was chances that it might collapse Japan economy. And to save country from this crisis, Japan government introduced 10-year bond yield curve at 0% to maintain interest rate and inflation to 0. And to maintain this bond yield curve to 0, the Bank of Japan started buying all bonds to maintain this bond yield curve at 0, because bond price is inversely proportional to bond yield curve. Means if selling pressure increases in bond, then the price of bond will decrease and the bond yield curve will increase. And to maintain this bond yield curve to 0, Bank of Japan had bought all buying pressure for several years, and Bank of Japan had become the biggest buyer of bond and Japanese stock in the form of ETF. And recently Bank of Japan released a document in which the Bank of Japan ETF holding had book value of 37.1 trillion yen and market value of approximately 83.2 trillion yen, which have unreleased gain of 46 trillion yen, represent one of the largest paper profit in financial history. This holding constitute about 8% of Tokyo Stock Exchange, and they want to sell this all, which is value approximately in US dollar about $534 billion. But the good part is they mention they will make sure that it must not impact the global market. Therefore, the Bank of Japan will sell only 330 billion yen per year in a book value term, equivalent to roughly 620 billion per year at current market price. And if Japan plan remain unchanged, then this selling process would take about 134 years to sell all this ETF holding. But the problem is, for last 12 years, the Bank of Japan was the buyer. Every dip was opportunity for the central bank to expand its holding. But now Bank of Japan is no longer buyer. It's now and will be the seller for the next century. And this transformation matters because Bitcoin is a liquidity sponge. And when the world's fourth largest central bank stop buying and start selling, and they suck cash out from a global system, and this might be the biggest Bitcoin trade no one is talking about. So now it is undeniable that if interest rate increase in Japan, then we might see Bitcoin crashing even more from this price point like previous crash during the rate hikes. But co-founder of BitMEX exchange Arthur Hayes says if Japan increases interest rate, then Bitcoin will go to $1 million. He gives logic behind this. He says if Japan increases rate too high, then they will bankrupt their own government. Eventually, they have to give up and print trillions of yen to save themselves. And when they start printing, then the Japanese yen dies and Bitcoin goes to $1 million. What do you think about this theory? Please comment down below. But whether they increase interest rate or not, we are gonna see two possible scenarios on December 18. First scenario, Bank of Japan hike interest rate again on December 18. Then the Japanese yen will get more stronger. The carry trade system will break and it will rise volatility in global market. Risky assets like Bitcoin will start bleeding and we might see Bitcoin likely to retest level like $75,000. Second scenario, the Bank of Japan pauses interest rate hike, then we might see carry trade will become stable. Short-term seller might start closing their short position in a fear of price surge. The Japanese yen will get weaker, and whenever the Japan yen get weaker, the Bitcoin had increased drastically. And this time too, Bitcoin could reclaim $100K in a matter of day if Japan pauses interest rate hike. So till 18, just don't watch BTC chart, start watching USD JPY pair, and along with that, if you are a trader, lower your leverage before 18th December, and if you are a holder, have some stable coin to catch this panic crash. So I hope you enjoyed this video. I will bring detailed video on Japan interest rate decision on December 18. So please subscribe this channel so you don't miss the alert.